IBM's $34 billion acquisition of Red Hat has closed, and I've got to tell you, it's closed earlier than I expected. I expected later second half. IBM CEO Ginni Rometty and Red Hat CEO Jim Whitehurst are on hand. This is quite exciting because I think this dramatically accelerates. Some people say it only somewhat accelerates IBM's growth rate. I'm going to ask Ginni how much it accelerates because I'm tired of analysts saying it doesn't move the needle. What does it do, Ginni? And welcome to Squawk on the Street.
Yeah, good morning, guys. Yeah, so Jim and I are both happy to be here. And this deal not only does accelerate our revenue, it resets the whole cloud landscape. And Jim, as you know, it's 200 basis points of growth for us, CAGR, 5 years. So it absolutely does accelerate growth. But more important, it's what our clients have asked for. And this is it, the hybrid cloud as the destination architecture for the future. So Jim and I couldn't be happier that we closed this, and it really was record time. And that allows us to get to work.
Yeah, and Jim, as you've seen, even our standalone growth is accelerated since we've announced the deal. So customers are already validating it with their decisions and commitments they're making even before it's closed.
Well, that's what I wanted to bring up because, Jim, a lot of people felt when this deal was announced that it was expensive. I know I felt it wasn't because the need to be able to be all things cloud is so important to IBM. But in reality, it turned out to be a pretty good price versus the other companies in your area, except for the fact that none of those accelerated the way you did. So can we say that IBM got a bargain, even though I know that you may be able to get in trouble with some of your shareholders?
You know, I've said it all along. I think IBM got a bargain. You know, not only are we growing as fast or faster than most others in the space, we also have significantly higher free cash flow than any of our peers. And so I've always thought IBM got a bargain. I think it's the right outcome for our shareholders, but I think it's a great outcome for IBM shareholders as well.
You know, we always said we thought it was very fair because remember, unlike most other cloud companies out there, Jim's run a really great profitable company. So for us, it's both free cash flow and gross margin accretive in year one.
All right, well, let me get a little aggressive then. Jim Cavanaugh on the January 19 conference call said, I'll remind you, we plan to suspend share repurchases in 2020 and 2021 as we pay down debt for our Red Hat acquisition to get back to our targeted leverage ratio. If cash flow is that good, any possibility that you can be back buying before that?
Well, we're going to prudently stop, just like Jim said we would, and then our goal is as fast as possible, a couple years here, get back to what you'd expect to be the targeted leverage ratio for a high single A. And again, we're strong investment grade. So I feel really good about this. And again, back to what it is that our clients want out there. And Jim, the other important piece I want to stick in there when you just asked that was the really important thing to our investors is this also still allows us to continue with a very solid and growing dividend, which is an important part of the value proposition for IBM shareholders.